confidence that the Fed is engineering a soft landing, confidence that we're embarking on a cut cycle, confidence that earnings are going to be better than expected, maybe about double-digit growth, but not without volatility, Frank. I mean, just think about the last 3 weeks. 3 weeks ago, we were down 4% in the S&P 500. We rebounded 4% the following week, and we were up 1% last week, hitting new highs. I don't think we're done with the volatility into the elections. So any weakness, though, I would be a buyer, and that is because the growth in the economy is actually much better than expected. And again, we are getting rate cuts. That's a great combination. If you think about last week's data, better retail sales, better regional manufacturing, better starts, better permits, up 5% month over month in terms of housing data, and of course, weekly initial jobless claims at a 4-month low. So all this adds up to about 2.9% growth, and that should be good for earnings.
That should be good for earnings, hypothetically. I also want to talk to you about some of the moves we've seen since the rate cut. We were talking to a guest earlier.
Yeah.
Tech's outperformed some of these cyclical sectors since the rate cut. Surprised about that at all? What does that say to you about market sentiment and how people are viewing this market?
Well, I think we have been seeing a broadening out, Frank, over the last couple of months. So it was tech's turn to kind of take the lead, if you will. But I don't think it's tech and everything else. I think it's both. I think you can add to technology on weakness, but I think you also want to add to financials, industrials, materials, discretionary. Because of what I mentioned before, the data across the board is coming in better than expected. So there's a lot to choose from. And I think you just want to be very choosy in terms of what you pick into the volatility.
Let's talk about what you're choosing. Your pick for us today is Exxon. We're going to show the chart, having a pretty solid year, but something I want to bounce off of you. I was looking at the LSEG estimates. When it comes to oil companies, they actually get pretty granular. Refining and marketing companies expecting to see their earnings down 64% year over year in Q3. Production and exploration down 11% year over year. What's the motivation behind this call when you see these kind of estimates when it comes to earnings?
Well, the motivation is that the stock is extremely cheap at 13 times forward estimates. Its historical average is about 20 times. And this company just made an acquisition of Pioneer, and it is actually going to triple their production on the E&P side. And they have a goal to grow 10% CAGR between now and 2027 in organic growth. And we also have a couple of catalysts. December 11th, they have an analyst meeting. And then next year, you have a whole bunch of new projects that are starting up, which should lead to above average growth, an incremental $4 billion in earnings between now and 2027. So I think there's a couple of catalysts, and I think the valuation is really attractive.
How are you viewing the tensions in the Middle East? We had RBC's Halima Croft on earlier. She said some of these tensions and some of the potential for disruption not fully priced into the oil market.
I think a lot of it is priced into the oil market, but I don't think you need oil to go up much higher than this for the stocks to work, given the valuations, the fact that they've lagged so much, too. And oh, by the way, they mint money, Frank, at $30 oil. So at $70 oil, they are printing money, and they are returning it to shareholders in dividends, in buybacks, as well as in CapEx, in a CapEx cycle. And that's pretty positive overall.
Last week, Department of Energy saying they're looking to refill the Strategic Petroleum Reserve at under $79 a barrel. That a factor in your decision at all?
No, no, not really. That's kind of noise to me. Again, like if I step back and I just look at where are these companies in general, not just Exxon, but where are these companies in general making a lot of money? And for the most part, it's a lot lower than this. And so what I want to see is I want to see continued increases in dividends and buybacks. And oh, by the way, we did get a buyback last week from Diamondback Energy. So I think you got a couple of good companies doing some really great things.